Today, we're going to be talking about the top 10 dividend stocks to invest in 2023. Now, before we even begin, I want to mention two things that we always want to look at in terms of dividend stocks. And that is, number one, have they consistently been paying out their dividends since they started offering it to shareholders? And number two, how has the actual stock performed over time? Because the last thing you want to do is start investing into a dividend, getting dividend payouts month over month or quarter over quarter, but the stock continues to slide in the downtrend. And also, I do want to preface by saying that I am not a financial advisor by any means, and make sure before you choose any of these stocks, maybe consult a professional. But regardless, welcome back to TQM, or the quintessential millennial channel, where we talk about all things millennials with an emphasis on finance. I appreciate everybody who has already subscribed to the channel, but if you haven't, consider doing so. Smash the like button for the YouTube algorithm, and also comment down below which of the stocks we talk about today are interesting to you. Now, let's go ahead and dive in. So first and foremost, we need to talk about a specific definition, and that is a dividend aristocrat. According to Investopedia, a dividend aristocrat is a company in the S&P 500 index that not only consistently pays out a dividend to shareholders, but annually increases its size of its payout. So that means not only are you going to be receiving dividends with all the stocks we're talking about today, but also increases in those dividends every single year. Or that's what you should see according to how they've been performing historically. So let's go ahead and dive in. I want to start with a bad example of a dividend because I think we all should be paying attention to these kind of things. And that is XRX, or Xerox Holdings Corporation. You can see that they are offering a dividend of 6.19%, which at face value sounds great. We're right around inflation, 6.1, 6.2%. I'm happy with that as a payout year over year. But if you look at the stock's performance over the last 40 years, it has been extremely poor. So with that being said, again, oftentimes these investment vehicles we want to keep in the market until retirement. So 30, 40 years, if you're someone in your 20s right now, like the majority of you watching, or even if in your 30s, you don't want these things to be short-term investments. So again, something like Xerox Holdings doesn't necessarily have any kind of proof that it's going to continue to perform well over time. But let's go ahead and dive into some of the companies that I want to talk about today. And we'll start off with one that you've probably heard of, and that is Johnson & Johnson, or J&J. As you can see here, based off of their 5-year chart, they've performed relatively well, up about 17.6% in the last 5 years, even though that 5-year period is during the pandemic. So that's one of the biggest caveats that we need to mention today, is these are companies that continue to pay out great dividends, even during times of financial distress and through the pandemic, which are two things that really do show that these are pretty resilient companies. Now, you can see that Johnson & Johnson has paid out a 2.79% dividend yield year over year, and has only increased because, again, this is also listed as a dividend aristocrat. So again, for those of you who aren't really familiar with Johnson & Johnson, you probably heard about it regarding their COVID vaccine that they created, and it was the one dose. That's what it was famous for, but also they're known for baby products, family related things, and you can kind of see what's on the screen there. But the best part is Johnson & Johnson, as a global healthcare company, has paid out dividends for over 130 years to their shareholders. It is known for its diverse portfolio of products, of course, and that includes consumer health products, medical devices, and pharmaceuticals. So again, Johnson & Johnson is the first one I wanted to mention today. Let's move over to number 2, Procter & Gamble. Based off of their chart here, you can see over the last 5 years, Procter & Gamble has risen by 67.37%, which is actually quite remarkable. And you can see it doesn't show any sign of slowing down. And if we look at the all-time chart, from way back in the 80s, started at about $3.38 per share, and now sitting at $141 per share. So again, when we look at Procter & Gamble, just so for those of you who haven't heard of the product or the stock before, it's a multinational consumer goods company that has paid out dividends for over 120 years. It is best known for its brands including Crest, Tide, and for those of you who have children, diaper brand Pampers. So again, this is not a company that's going anywhere, and it's been around for longer than probably you and I both have been alive on this earth. Now to move over to company number 3, and that is Coca-Cola. Coca-Cola is also listed as a dividend aristocrat because of the fact that it has been paying out its dividends to shareholders for, again, longer than I could even think, which is right around 120 years. It is the largest producer of soft drinks in the world and has a wide range of products, including Coca-Cola, Sprite, and Fanta. So again, for those of you who are not too familiar with Coca-Cola, which I'm sure you all are, you can go through and I'll have the links down below for each of these companies' websites from a corporate standpoint. So you can look at it from an investor perspective. Is this something that really does align with my values? Because again, most of these companies are a part of what we call corporate America. So I know some of their practices might not be something that align with your ideals or your beliefs. And with that being said, you have to determine whether or not this is something that you want to put your money into, because as an investor, you are now officially a shareholder of these companies. So now to move on to number 4, which is Walmart. Walmart is a company that's near and dear to my heart because I was actually employed by them once upon a time, many years ago. But again, I really found that it was a great company to be employed by because their values of family. And again, it really was a pretty good experience overall for me. Currently, their shares are sitting at $142.15, up 36% over the last 5 years. And if you look at the max chart, I think it's incredible. In 1983, a single share of Walmart was worth 73 cents per share. So that means you could have purchased some of the shares at that cheap. And if you would have held for the last 40 years, your money would have went up substantially. But with all that being said, they are also a dividend aristocrat, meaning that they're paying out 1.58% year over year. Now, Walmart, of course, is a retail company and has paid out dividends for over 45 years since the stock basically became public. It is the largest retailer in the world and offers a wide range of products, including groceries, electronics, and clothing. And the best part is their dividend payout is about 1.58% every single year. So again, that was number 4. And now moving on to number 5. And make sure you stick around till 10, because I think, again, most of you will probably consider 10 as maybe a better option from all the ones that I'm going to mention. But again, I think that these all have their own respective place for our individual portfolios. Moving on to 5, that is PepsiCo. So PepsiCo currently is paying out a dividend of about 2.71% year over year. And again, their performance has been excellent. PepsiCo is a food and beverage company that has paid out dividends for over 50 years. It is best known for its Pepsi brand as well as some of their Frito-Lay snacks and Quaker Oats food products, giving a dividend payout of about 2.71%, as I mentioned. Now, number 6, AT&T. It's a telecommunications company that has paid out dividends for 30 years. And the thing that I like about AT&T, honestly, is their stock performance. So over the last 5 years, we do see that they're in a slight downtrend, but overall, they're kind of a stock that pretty much moves sideways, meaning the expectation every year is that you get a 5.51% return, which is the highest that we've actually showed today from all the different stock options. So again, AT&T paying out 5.51% dividend and only has increased even through the pandemic. Number 7, Cisco Systems. It's a technology company that has paid out dividends for over 20 years, and it is known for its networking equipment, which is used by businesses and governments around the world. So Cisco Systems, again, is one that was actually new to me while making this video. I've heard of the company, but it's not one that I've included in my portfolio previously. But after actually looking through some of their firewalls, and I know right now small businesses and big businesses are alike are trying to keep security as the primary focus, especially with all the cloud computing that is going on and cloud storage. That is becoming one of the most important aspects of any business. I have a friend who actually works for one of the bigger credit card companies, Capital One, and he told me how much money per day, and I'm talking hundreds of thousands of dollars, that they're paying every single day to ensure that there's security for all their customers. So keep that in mind for Cisco Systems. Number 8, probably the most popular one out of this entire list, where we sometimes eat when we're just trying to get some quick food, and that is McDonald's. McDonald's, being a fast food company, has been paying out dividends to their stockholders for over 50 years. Currently, it's up about 59.93%, and you could see pretty much year over year, regardless of economic landscape, from a macroeconomic standpoint, McDonald's Corporation has excelled through and through. It's amazing to look at the chart because Yes, maybe during the 2000-2008 recession, there were some dips in terms of their stock price, but overall performance, if you look at their quarterly earnings historically, McDonald's never, ever failed any of their earnings. It's been exceptional. Now, again, you have to look at it from a sense that, do you believe in McDonald's vision of feeding people food that isn't necessarily the healthiest option? That's for you to determine, but from a financial standpoint, McDonald's does perform. Number 9, or our second to last stock that we're going to talk about today, Microsoft. So again, Microsoft is a technology company that has paid out dividends for over 20 years. It's actually something that they started offering later on as a shareholder incentive to continue bringing in new stock investors. It is best known for its Windows operating system and Office software suite. And again, they actually have a dedicated website, just like McDonald's, just for their investors. So you can go in and kind of look at some of the products that they have underway. You can look at their investor page where you can look at what are some things that they're offering. And also one thing that you want to understand with Microsoft is they have a lower dividend yield, meaning that they're only paying out 1.12% year over year. But if you look at the all-time chart, this is one of the best performing stocks ever in the stock market. Starting out at 10 cents per share in 1986, a dime, you could buy a share of Microsoft today. It costs $242 to buy a share of Microsoft. Think about that as a multiplier. And yes, if you thought 246,000%, you are absolutely correct. And now the last one. And I think this one is what's going to make things a lot easier for most of you. So I appreciate those of you who stayed and tuned in through the end. I know this was a very jam-packed video, but there's no other way to do this other than getting the information about these individual companies and understanding what it is that they're doing and how they're paying out dividends to their shareholders. So again, probably the best and easiest one to invest in out of the entire list today is the S&P 500 Dividend Aristocrat ETF. All of the aforementioned companies that I talked about today are all combined and compiled into this ETF. Now, in addition, there are about 55 other companies to make a total of 65 in the S&P 500 Aristocrat ETF. But this exchange traded fund compiles all the companies that are paying out dividends and have been paying them out consistently and also increasing them year over year into one index fund. So with the click of a button from your smartphone or your computer, you can start investing into these companies as a shareholder today. So I wanted to make sure everybody was also aware of the affiliate link down below for Moomoo. So make sure you check it out where you can get 15 free stocks when you start investing today. And also, in addition, all the stocks I talked about are available on their platform. And in addition to that, even the ETF, the S&P 500 Aristocrat Dividend ETF is also available if you'd want to get started. I appreciate your support as always. Thank you all so much for tuning in. That's all I had for you guys today. So until next time, everybody, take care. Peace.